The importance of retirement planning for tech freelancers.
Tech freelancers often focus on immediate projects and income, but planning for retirement is just as vital. Unlike traditional employees, freelancers must take charge of their own retirement savings. Without employer-sponsored plans, setting up the right account is essential for long-term financial security. Fortunately, several flexible and tax-advantaged options are available specifically for the self-employed.
Traditional and Roth IRAs simple starting points.
Individual retirement accounts, IRAs, are among the simplest ways for freelancers to save. A traditional IRA allows for tax-deductible contributions now, with taxes paid at withdrawal. A Roth IRA works oppositely. Pay taxes up front, then withdraw tax-free in retirement. Both are easy to set up online or at your bank, require low minimums, and offer a broad range of investment choices.
Solo 401k, boosting contributions for the self-employed.
For higher savings potential, the Solo 401k is a leading option for tech pros working alone or with a spouse. This plan lets you contribute both as an employer and employee, often resulting in larger annual contributions than IRAs. Many providers allow online setup, and you can choose between traditional or Roth options depending on your tax strategy.
SEP and simple IRAs, options for freelancers and small teams.
Simplified employee pension, SEP IRAs, and simple IRAs are well suited if you have a small team or want flexible contributions. SEP IRAs allow high adjustable contributions with easy annual setup. Simple IRAs are ideal for slightly larger businesses with steady income, providing built-in employee contributions and minimal paperwork.
Setting up your Freelancer Retirement account. Action steps.
Start by choosing a reputable brokerage or bank that offers retirement accounts with low fees. Open your chosen account, whether IRA, Solo 401k, or SEP IRA, by filling out an application online. Link your business bank account to automate contributions and review investment options. Remember to revisit your plan every year to boost your savings as your income grows.